Today's call by Oppenheimer. They're downgrading the bank to perform from outperform on valuation concerns in the near term. But analyst Dominick Gabriele still likes the SoFi story for the long run, and he joins me now. Dominick, it's great to have you here. What is the valuation at the moment?
Absolutely. Thank you so much for having me as well. I mean, when we look at the SoFi story, we want to really break down SoFi into two parts. And you really want to break down the bank on its own and the technology segment. And when you add all those up at a higher valuation of roughly, 3 times tangible book value multiple, and about $1.20 or so for the bank using Fiserv and FIS as revenue multiple comparables, you get to roughly about a $9.50 stock. And we think that that's at the high end of where the stock is likely to trade on 2024 estimates.
Yep. So, now I guess the question becomes from here after this, initial flurry of excitement about, and just so people are following, the student loan resumption could be a huge catalyst for people to refi. And that's kind of SoFi's bread and butter. What's the next leg of the story?
Yeah, it's a great question. And that is baked into our estimates. We also have some personal loan slowdown in originations baked into our estimates, given our overall thesis about, consumer spending slowing, demand slowing. That's also baked into our estimates. But we think that the SoFi story is going to be one of just execution. And instead of having various company-specific or macro issues affecting the trajectory of the stock, we really think that it's going to be all about execution, delivering on what they've said, GAAP profitability, improving margins over time. We think that that's going to drive the stock higher over time, but perhaps a pullback to lower levels near term.
Sure. And those lower levels, be they what they are, don't deter your long-term more bullishness on the stock?
It doesn't, because, look, they've done a really great job on their revenue growth and being really nimble. And the diversification of their business has really shown through, given that they were really low on originations for student loans, which is where they originally started the business. Had they not made the changes they made over the last number of years to diversify their business, this would have been this stock would have been in a significantly different place. And it's because of their execution that, look, they've been beating expectations. We actually raised our revenue outlook in this note. We reiterated our outperform when the stock was just below $5 as well, trying to fight the bears off with a big stick. And so we believe in the company's execution. We believe in the business model. For us, it's just about valuation.
All right. It's good to have you here today, Dominick. Thanks for your time.